Hello and welcome. You're watching Your Trades on ET Now with me, Snehi Shah, and with me as always is Priyanka. Priyanka, very good day of trade coming in, especially what a relief after the falls and the carnage we saw across D Street yesterday. We've reversed those losses, well, not entirely, but to a very great extent. And Nifty 50 has ended the day with an uptick of almost 3.4%. 20 to 620 is where we have ended the day. So pretty stellar move coming in. We did manage to touch the high of 20 to 670 today, but we've closed just slightly under that at 20 to 620. Pretty good moves when it comes to the Nifty. What's very interesting to know is that all sectors today have closed in the green. You have metal, auto, consumption, FMCG, everything today has closed in the green. Even IT, which has been the least gainer of the day, has closed with an uptick of almost 2.4%. So if the least gainer is closing with a 2.4%, you can only imagine Nifty Metal, the top sectoral gainer of the day, has closed with an uptick of more than 5.7%, followed by auto. Then you have FMCG. Remember, FMCG was the only positive spot in yesterday's trading session when we went as low as 8%, but recouped those losses. We closed somewhere between 5 and 5.5% yesterday, low on the Nifty, and FMCG continued to be positive back then and also continues to be one of the top winners today as well. Nifty FMCG index that has hit record high today as well. Nifty mid cap, it has climbed above 50 DMA. Nifty small cap is back above that 100 DMA mark, so very crucial levels both of these are maintaining. And Nifty mid cap and small cap have registered the biggest single session gain in terms of absolute points as well, so some positivity on that front as well. Metal has registered the biggest single session gain in over 2 years. It's the top sectoral gainer also today. Nalco and SAIL have what have led metals to be the top sectoral gainer today as well. And for FMCG also, biggest single session gain coming in today. Same you can say for auto, biggest gain coming after 4 years. Krishna Industries and Ashok Leyland were your top winners among the auto pack today. Pharma also biggest gain in 2 years, Granules and Sanofi. Nifty Bank, remember today was the Nifty Bank expiry as well. So Nifty Bank has registered its biggest gain in over 3 years, and Federal Bank and Bandhan Bank are your top winners when it comes to that Nifty Bank pack. And largely that is what the markets looked like today, and no sectors have closed in the green. Nifty 50 entirely in the red, looking really good right now on the screen. And even when you take a look at what equities have been up to, you had a lot of top gainers today, and overall, Priyanka, I think pretty stellar moves coming in across the market today.
Absolutely. In fact, looks like we've almost reversed our losses. What happened in some of the sectors, not entirely, because we yet to see the kind of losses we saw in market capitalization of stocks like Adani. They are yet to recover, but a lot of pack has recovered. At least metals has recovered. In fact, BSE market cap, which saw an addition of round about 13.62 lakh crore today. Looks like the kind of losses we saw yesterday, completely a roller coaster ride from last 3 days. What we saw on Monday a different day, Tuesday happens to be a different day, and today happens to be completely a different day. But then 3 sectors we would like to highlight here, since a lot of it Sneha has already covered: telecom, metal and battery stocks, which gained in the trade today. Telecom stocks, there was already a buzz before the exit poll even that there could be a likely tariff hike coming in post the verdict, and that's what made these stocks go higher today. Idea gained more than 10% today, being one of the top F&O counter also. Bharti Airtel was 3.5%, and this is a tariff hike which would happen, which has not happened in last 2.5 years. This was one space which was buzzing. Metals, of course, this was the single largest gain for metal pack in last 2 years also. Battery stocks gained. Entire auto pack was buzzing, and of course the battery stocks along with that were also buzzing. Some of the other spaces, since all these sectors they closed in green today, but then the kind of tariff hike which is being which is likely is around about 15 to 20%, and that to be immediately post the verdict which was coming in. Hindalco saw a loss today because, of course, Novelis delays its IPO, and citing the market condition, that was one of the top losers, lost 5% in the morning trade, but then later it did recover some. But then major part of the action happened in FMCG continuously for the second day also, and hence we saw that the kind of moves we saw yesterday, a big part of it have got reversed today, and of course a bloodbath. And this is all because traders and market participants were clearly assessing each and every development, whatever was coming from the political front. But then now let's go ahead and let's have our techies on the show, our expert on the show, to understand that how to navigate the market from here. Ruchit Jain joins in from 5paisa, 5paisa.com. Ruchit, welcome. What do you make of the markets today? Because most of it looks like it appeared as if the shorts which were created yesterday got covered. And of course, there was a Bank Nifty expiry. And of course, a lot of political developments which traders and market participants were assessing. But now what? What to do with the index now?
Yeah, very good afternoon, Priyanka. Well, Priyanka, it seems that the market sentiments are changing every day. In the last 3 trading sessions, we have seen that markets have turned a lot volatile. But the good thing is that the event is now behind, due to which the volatility was very high. And as the event has surpassed, so I think now the markets would try to gain some stability again. And what we have witnessed today, good thing was that there was no follow-up selling after yesterday's corrective phase which we have seen. So if there was no follow-up selling, and in fact a good stock-specific buying momentum was there, which indicates that the broader trend still remains intact, and the short-term volatility which was on account of the event, I think that should be behind us now. So it remains a buy and dip market again, to be in line with the broader trend. And in case if we get any dip again towards 22,200, 22,100, so I think the risk-reward ratio could become favorable for traders to create fresh longs again in the index over there. Now, if we look at the derivatives data, then historically also it has been seen that whenever FIs have long short ratio below 15%, that are considered as short heavy positions, and then they come to cover the short positions, which lead the markets to new highs or a good significant rally. So as on yesterday, we witnessed that again the long short ratio was around 12-13% only, which is again short heavy positions. So I think since markets have shown some stability after the event, so these shorts would ultimately come to cover their positions, which should lead the index further higher again 23,000 and beyond. So one should keep a buy and dip approach, and in case if you get any kind of decline, then one should use that as a buying opportunity.
All right. Well, looking at declines as a buying opportunity, Ruchit, point well taken. But what would your picks be if this decline does happen, and how would you play this entire buying on dip opportunity? What are your picks at this point?
So a couple of stocks I have on my list to create longs if you get any kind of dip. First is a buy call in DLF. The stock has already seen a correction before the event itself. It's not that the stock has corrected only in last trading session, but it formed a high on 1st of April around 967. From 967, the stock has went through some corrective phase. Yesterday, witnessed some panic bottom getting formed around that 700 mark. And so I think the risk reward ratio now again has turned favorable for taking some contra buys over here. So DLF is one stock which one can look at buying opportunity with stop loss below 750 for targets around 850. And metal space, I think that is one space where we have witnessed a good price volume action today also. So Jindal Steel within the space is looking quite attractive because the correction of last 2 trading sessions, the stock has managed to find a support around its 100-day exponential moving average, which was not breached. And so in case if we get any dip towards 990, today the stock already was up by 5%. So any kind of declines around 990, 980 should be used to buy with stock below 950 for potential targets of 1060.
All right, thanks very much. Ruchit, you would be a buyer on decline. That's what we make out. And the 2 recommendations that you've mentioned are on the screen with the target and stop loss. Thanks very much. We'll let you go on this.
Thank you.
And let's go ahead. Let's talk about certain specific sectors. In fact, consumption stocks, we saw that amid the volatile moves yesterday, what we saw, these stocks were rising. Today, again, these stocks, and in fact, entire pack was the top sectoral gainer also. What are the hopes of the rural policy push? Is that aiding this uptick on the rise, or simply the momentum in nature? What is the actual reason? Let's take the let's make you hear the take from the big market experts with the likes of Atul Suri, Sunil Singhania and Vinu Gopal.
It was a laggard sector was FMCG. So it's not that there were any big build-ups or any over ownership. This was a space where there was under ownership. And even to get to equal market weight, you will kind of have to see the kind of buying you're seeing today. So yes, there will be a need. The government will have new priorities. There will be some learnings, and the sense is that there is going to be a lot more rural push. Based on that, there is a pickup in FMCG spaces.
The only place we are underweight is consumption. because by nature we are a little bit value conscious, and most of the companies there used to trade at a slightly higher multiple. But obviously in this kind of a scary scenario which is being built in, they are the ones who are doing very well.
The way I look at it is that if we were to still broadly view this entire short-term narrative, the short-term narrative is that probably there's going to be a lot of subsidies, there might be a change in terms of how government looks at budget, and that could essentially potentially push some consumption. So is FMCG the right way to look at it? Is the right sector to basically invest? I think there are other ways to invest. You could probably invest in autos for that. You could invest in consumer electrical durables, small value discretionary for that, because those are sectors which are relatively cheaper and have faster earnings growth than your FMCG. So FMCG is not like something that is you should be hiding in. There could be short-term trades around it. You should sell those trades.
All right, well, that's the word coming in from the top market voices on how you need to navigate the FMCG sector going ahead. But keeping in mind everything that's been happening on the political front, ab ki baar coalition sarkar, that's what it seems like. But should investors worry now? Historical data doesn't suggest so. In fact, data shows that the Sensex has seen robust CAGR gains even during coalition governments over the past 4 decades. My colleague Ajay is here to get us all of those details that are very interesting data over here. Break it down for us.
Well, that's correct. The common perception and the fear in the market is that a government now, Modi-led NDA government, which has really done work for last 10 years as a complete majority, will now be, because of the way numbers are pouring in or have poured in, the verdict will have to work in a coalition. But what's the fear? The fear is that whether a coalition government will be able to perform with, say, effectiveness or not. The data suggests that historically, 4 out of 5 times coalition governments have actually performed very reasonably in the economy, and market has drawn a lot of heart out of that. Look at that. The data coming in from 84 to 89, Rajiv Gandhi had the majority, 21% kind of returns coming in. We've got PV Narasimha Rao also in the past perform in a coalition government. VP Singh was minority government but coalition government. So 4 out of 5 times coalition governments have actually generated positive returns in the market. And this despite a lot of crisis, BOP, balance of payment crisis happened, stock market scams happened, there were wars, there were droughts in the situation. HD Devagowda duration was a very short one. That was the only negative. But otherwise, minority governments also have produced positive returns. So that is something which investors and traders need to take heart from, that coalition not necessarily mean lack of effectiveness. Coalition means that you take into account everybody's, it's a consensus building kind of decision making. We'll have a lot of decision making which lies ahead. It'll be interesting to see whether Prime Minister Modi in his new term is able to do exactly that.
All right, 4 out of 5 times is quite a good ratio. Contrary, of course, now we have to settle for a coalition government, but market seems to be making peace with it. Let's stay for a break here. More to come when we come back on the other side of the trade. Don't go anywhere. Welcome back. You're watching Your Trades, and now time for action from the derivative space. VIX did cool off significantly today, around about 30% of decline in VIX, and that took it below 20 levels, also precisely below 19. Short covering was a clear trend on Nifty. For Bank Nifty, the trend was long built up, though today was a Bank Nifty expiry also, but what seems to be the action is that the higher call strikes are also being bought. If you talk about the active calls in terms of call buying, we saw strikes like 22,700, 22,800. These calls were bought, and support looks like we should not fall below 22,500. That happens to be the support because that's the strike where the maximum of the puts have also been written here. So looks like we are in for a higher level also. Seems like 22,700 or maybe 20,800. Seems to be now the Nifty expiry on Thursday, for which action would be shifted to.
Well, absolutely, and expiry day tomorrow, so lots to watch out for as well. But let's also talk about the big story of the day, and today's big story of the day happens to be a sector, and that is the entire FMCG space. Now, FMCG has hit a 4-month high. It's also registered its biggest single session gain So let's zoom in on what's been happening with FMCG, because the likes of HUL, Dabur, they've notched the biggest single gain in 4 years. My colleague Vinny, who tracks the sector closely, is joining us with the latest update and what is leading to this exuberance in the FMCG space. Vinny, over to you.
So absolutely, FMCG index, that's the one that's seen a good gain. Yesterday also it managed to see on the positive side, and despite that weak market, FMCG managed slight bit of that positiveness and slight bit of a green on the screen. And today itself, when you look at it, the FMCG index saw very, very strong gains. Now overall, in terms of valuations also, when you're looking at it, it's quite in terms of the 5-year average was at around 40 times, and currently FMCG average 5-year average is at 34 times, and trading at 37 times 12-year forward is the FMCG index. Now, FMCG index has seen the biggest single day gain in over 4 years, and obviously big important stocks, whether you look at an HUL, Dabur, Marico, Tata Consumers, Imami, all of them had seen very good gains. Triggers, yes, now what they believe and what analysts also believe, that this is a focus area that will come in from the government side, more on the consumption story that will start playing out. Rural push is what the government will focus on, and rural recovery is already something that these companies have highlighted in Q4 FY24 in terms of the commentary. So that is a positive there. Other than that, let's not forget the sector has seen a bit of an underperformance in some time in the last year or so. So that is why when you're looking at it, there's a chance of it seeing a better move. Good monsoon is something that will support the growth. Pricing growth is expected to come back for FMCG companies, as well as raw material costs. They are supportive, so they are benign, and that will not increase their costs. So that is in terms of a margins also, that's what someone could watch out for from the FMCG pack. So yes, overall we also have seen brokerages giving a positive side and overweight stance for the consumption story. So Jefferies is overweight on consumer staples. Goldman Sachs also has upgraded staples from underweight to a neutral rating, given that rural recovery is expected. And other than that, CLSA ITC remains their preferred pick. We had Jefferies that came out with a note on HUL, upgrading the stock to a buy, increasing the target price to 2,950 rupees, and a lot of positive signs coming in for the consumer staples. Analysts also giving it a thumbs up.
So a lot of upgrades, positive notes on consumption stocks, and of course an anticipated rural push in the upcoming budget, which seems to be driving these stocks. Thanks very much, Vinny, for that update. But then let's take you to another space which was also soaring high today, and that is alco beverage. Stocks like USL, UBL, in fact Sulab, they all were trading higher today. And what are the key tailwinds for the sector that will aid these companies' growth in, going further? Ashesha joins us with all the details. Ashesha, over to you.
Well, yes, now that elections and election outcomes are behind us, telecom industry is expecting major tariff hikes. Just to give you a sense of the major tariff hikes that were undertaken last time around. So after 2019 general elections and outcomes, 2 major rounds of price hikes in the telecom industry were undertaken. One was in December 2019, where prices were hiked by nearly 30 to 35%. This was followed with another price hike in December 2021, where prices were hiked by about 20 to 25%. And now, yet again, telecom industry is bracing for another round of price hike, and industry expects price hike of nearly 15 to 20% that could come in over the next couple of months. Let's also look at the reasons as to why telecom industry is bracing up for some price hikes. Remember, no price hikes have been undertaken since December 2021, and that's a gap of nearly 2.5 years. Apart from this, return ratios continue to remain subpar as compared to global players, and 5G capex is what these companies have been undertaking, and now they intend to undertake some more price hikes going forward. Moving on to ARPU trend then, in the last quarter of FY24, the results that were just reported, Airtel reported highest ARPU or average revenue per user of about 209, followed by Jio, which stood at 182, and Vodafone at the bottom of that list at about 146 rupees per user. Moving on to 2 tariff hikes that have increased ARPU and the rise in ARPU that we have seen since 2019. So for Vodafone Idea, ARPU has risen from 107 to about 131 recently, which is an increase of about 22%. This being followed by Jio at about 39%, and Airtel has seen price hike and increase in ARPU to the tune of 48% since 2019. Now, going going forward, tariff hikes, remember, has the biggest impact on players like Bharti Airtel, followed by Reliance Jio. Reliance Jio's tariffs are at a discount as compared to its peers, and the benefit of price hike is on the second order with respect to Jio, and then followed by Vodafone Idea. Vodafone Idea, of course, gets impacted on account of the losses that it has been incurring over the last several years. So yes, telecom industry is bracing up for price hikes. About 20 to 25% price hikes are expected to come in over the next couple of quarters.
All right, Ashesha, thanks so much for taking us through that. So that was on the telecom sector and the impact that these price hikes are going to have. But Ashesha, while you're with us, let's talk about a sector that you track very closely, and that's Alco-Bev. Now, these stocks were also trading, were gaining in trade today. So what are the key tailwinds that will aid this Alco-Bev companies in the future? And this sector is also looking pretty good. So take us through that.
Well, yes, liquor stocks were in focus today. The likes of United Spirits, United Breweries, Sula Vineyards, Radico Khaitan were all gaining anywhere between 4 to 8% in today's trading session. One of the key reasons, of course, was the focus on consumption theme that we saw in today's trading session, and that is the reason all these stocks were gaining in trade today. Remember, volumes for most of alcohol companies were impacted in the last few months on account of election-related restrictions and dry days that were imposed, and now volumes are expected to see a pickup in the coming couple of quarters. As far as medium-term triggers are concerned, remember UK-India FTA is also on the anvil, and spirit makers the likes of United Spirits will be positively benefited on account of increase in consumption or increase in tariff hikes that is expected to happen, and raw material costs for these companies are expected to come down on account of India-UK FTA. As far as other triggers are concerned, remember several states are also expected to go ahead and increase prices of alcohol, especially states like the likes of Telangana and Andhra Pradesh. So that will also be a major trigger going forward. As far as long-term triggers are concerned, they continue to remain intact. Premiumization trend is intact, and the per capita consumption of liquor in India continues to be at the lowest level as compared to several other global and emerging markets. So all in all, triggers are all in place. Remember, management commentary that has come in with respect to the outlook going forward is also very positive. Let's talk about United Spirits in particular, where the management is targeting P&A growth of about 13 to 14% in value terms and about 4 to 5% in volume terms. Similarly, as far as Sula is concerned, management commentary over there for FY25 is also very positive. Nonetheless, if we look at the valuations, these stocks are not trading cheap, but all in all, the focus on consumption is what drove gains on all of these stocks in today's trading session.
This one side of consumption stocks were also gaining in, and the possible reasons what Ashesha is listing. Thanks very much, Ashesha, for all those details. But there were a couple of more stocks also which were buzzing in trade today. Gaurav gets them. Gaurav, over to you.
Well, yes. First, let's begin with KEC International, because company has won an order worth 1,000 crore rupees in civil business, and on back of this news we saw the stock was trading in green today. Next, let's talk about Kotak Mahindra Bank, because Zurich Insurance Company was going to acquire 70% stake in Kotak Mahindra General Insurance Company, and now RBI has given an approval. Now this transaction is going to be worth 5,560 crore rupees, and on back of this we will definitely watch out on Kotak Mahindra Bank as well. Let's now talk about Lupin, because company has actually acquired two major brands. So one is Arane TM, which is based in Germany, and Nalcrom TM, which is based in Canada and Netherlands, along with the associate trademark for Sanofi. And on back of this news, we will definitely watch out for Lupin as well. Next, let's talk about Tata Motors, because we have got JLR numbers from UK, and if you look at JLR sales numbers, they have gone up almost by 29% on a YY basis in the month of May. Now they stand somewhere near 6,093 units, and on back of this, we will obviously watch out for Tata Motors as well. And lastly, let's talk about Concor India, because Concor and SCI has recently inked an MOU which will provide seamless end-to-end logistics solutions, which is actually going to be positive for Concor. And on back of this news, we will watch out for Concor as well. So definitely on back of all these news flows, we will watch out on these stocks and see how they perform in coming days as well.
All right, Gaurav, thanks so much for taking us through that. Viewers, with that, we completely wrapped up on this edition of Your Trades. From Priyanka, me and the team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.